Good afternoon, everyone. Welcome to Market Talk Monday with Isaiah,
Yep,
the Porter,
we're here.
and the team at Foundations Investment Advisors and the all-wise Darren Levitt.
Oh yeah.
So,
Hope everyone had a good Thanksgiving.
yeah, happy Thanksgiving to you guys out there.
And our Christmas is coming at us.
Fast and hard,
Mm-hmm.
which has some implications in what we see in the market. You know, as we're recording this today, markets are off this morning.
Mm-hmm.
And I was just looking as we were getting ready to go on air here. It looks like the Dow's down 0.75 of a point, NASDAQ's down 0.38.
Yep. S&P's almost down half a point.
Yeah. So all the major indexes are down. Interesting is gold's up, silver's up.
It sure is.
So, Isaiah, when we look at this week and kind of coming off Thanksgiving, that it was a shortened reporting week.
Mm-hmm.
What do we have to look forward to through the next 30 days?
Yeah, I mean, there could be a possibility. The probability of a rate cut is now a little higher than it was last time we spoke. I know we said
I
it
think
was
in print was around 80% now.
80% now, and it was
Chance.
less than 30 a couple weeks ago.
Yeah.
But it does bring up some good points of gold doing its thing, silver and copper and all these metals and inflation sensitive equities or equity positions or any sort of oh my goodness, I'm blanking. Any sort of commodity that you want to go out and buy.
Yeah.
I had a brain fart there for a second. Any commodity you want to go out and buy. I think that we're going to see tech kind of settle down for the rest of the year, especially after all the earnings that just came through. Everything is positive, but there's still kind of that sentiment out there that people are kind of skeptical of the big AI bubble, is what a lot of people are calling it. So we'll see a lot of tactical movement inside of our models, taking the approach into a little bit what I like to call inflation sensitive models that are tracking a little bit more of the gold, silver, and commodity approach. Especially now, there's a through an ETF that we have in the model. There's a little bit of exposure to Bitcoin, and Bitcoin's at pretty low to where it was. So.
Well, you guys are reporting the Philadelphia Semiconductor Index gain 9.7% on the week, even though NVIDIA had struggled after the news that Meta is now going to compete in a big way with a rival Google chip.
Yep.
And supposedly the processing time is cut in half and using less energy.
Mm-hmm.
And the price is supposed to be a third of NVIDIA's chip.
Yep.
So, I mean, what if that happens and that comes to fruition, we should probably load up on some Google? What are you thinking?
Yeah, that's kind of the skepticism in the AI space. It's very similar to what we've seen a lot, kind of that race to zero, without getting too much on that topic, but that race to zero. Same thing you'll see in the tech world. If you remember back when the Nintendo 64 came out, people were releasing game consoles, and they were like, oh my gosh, this has the same computing power as some of the power that they have in these industrial plants that are using computer technology, but they're releasing it at, wow, I forget what the Nintendo 64 released at. What is probably, or the NES, whatever released. Yeah. I don't remember what the price was. Maybe $100 back then, maybe.
Yeah.
But you'll see that in the AI tech space. What they're trying to do is have maximum power, maximum computing, but at the cheapest cost. I mean, it's what a lot of that's what capitalism is. You're looking for the maximum power with the minimum spend to make your product.
So if a person's out there loaded up on NVIDIA, they should probably look at the big D word again, right?
Yeah, diversification. Take the wins. I mean,
Jinx, you owe me a soda.
Yeah, year to date, NVIDIA's up. What I would recommend is taking a little bit off the top of your NVIDIA and tactically moving that into another competitor. Because you never know. Some of these competitors, they may release the chip, but there may be some malfunctions or some sort of firmware out there that messes it up. I'm not super heavy into the technological terms of what these CPUs and GPUs use, but I can understand there is malfunctions, there is problems with some of these chips. Back in the day, even when Microsoft released their Xbox, they used to have a problem where your Xbox rings would go all red instead of green, and that when
That's
we
not good.
we called it the red ring of death. If you
Yeah.
had that, your console was done. You'd had to go get a new one. So that can happen inside of these chips. There can be malfunctions. There can be problems. So Meta can come out with a cheaper product, but sometimes when there is a cheaper product, it can.
Cheaper's not always better, you're
Yeah.
insinuating here.
Yeah, but I still think there's a possibility that it comes out, they make a great product, and there's going to be room for growth in that area.
So Intel soared on news too,
Mm-hmm.
and that was because Apple said that they may source Intel chips. Is that correct?
Yeah. Yep.
Okay.
That is correct.
So, we're seeing in this tech world that there's still the sentiment is still that tech is going to perform.
Mm-hmm.
Are you doing anything different with portfolios like the unconstrained or any of those more aggressive portfolios? What are you going to make any changes?
So near the end of the year and beginning of quarter one, I'm going to look at maybe taking less exposure in client portfolios to the unconstrained. And if they're sitting at a 20% exposure, maybe bump that down to 15 or 10. If they're at 10, bump it down to 5. But give them that.
So taking about half the risk off the table.
Yeah, taking half the risk off the table, and then.
What is that up this year to date?
About 56%.
And it was
at 78%.
Yeah. So, there's been a pullback in that. We've seen, clients give up a little stake there.
Mm-hmm.
And your reason for a potential pullback would be what?
An AI bubble. It's very AI and tech driven. So if there is a pullback in the AI space, you're going to see that come to fruition inside of the unconstrained model.
So you pull back there and you reallocate where?
So if you see the tech, usually what I've seen and what I've studied in the past couple months is whenever I see a large tech pullback, there's a major uproar in gold. Especially if there's any economic crisis or crises that they see coming. Precious metals usually perform, and that's where I would reallocate into something like our inflation-sensitive model, picking up that gold exposure, especially with the little bit of allocation it has to Bitcoin. Bitcoin sitting at 80,000, I think, is very much on sale. I think Bitcoin has the propensity to go a little lower, but I do think that $100,000 mark is the sweet spot. So getting that rise back up to 100,000, I think we could see that again next year. If not before the end of the year, because Bitcoin moves like that. So having a little bit of exposure, buying that Bitcoin on sale, and also getting that exposure to copper, silver, gold, oil, whatever prices we have, or the rest of the commodities that we have inside of our inflation-sensitive model.
And going into December now, I guess we'll be looking at retail and looking at retail stocks to see how those perform.
Yeah, maybe not GameStop, but...
That's kind of past now, huh?
Uh-huh.
Yeah. But looking at the retail and seeing how confident the consumer is with headed to
Christmas.
Christmas holidays definitely is what I'm alluding to here. Anything that you would say this year that we should be paying attention to in this last 30 days of trading? What's the outlook, and then what's your outlook going into 2026?
Yeah, so just to hit on the retail side a little bit, the retail sales slightly missed, but the spending on Black Friday remained pretty solid, which it usually does. And then consumer confidence also dropped to 88.7%, so weaker sentiment on consumer confidence. But I think as we go forward, I think we'll see the consumer confidence probably stay in that range until the end of the year. Quarter one, I don't have a crystal ball, but I think we could see a little turmoil in quarter one of 2026. So again, that kind of coincides with let's take a little risk off the table from our unconstrained model. Yeah. Let's look at something that has a little bit more commodity exposure as we move forward.
So you're saying because the sentiment and business conditions, labor market, household income falling.
Yep.
And then ADP showed the private payroll data. The 4-week average had dropped by 13,500 payrolls. So, but initial unemployment claims fell, which is good.
Yeah.
So there's kind of still a mixed
Mixed
punch bowl
signals.
there. Yeah.
That's exactly the reasoning behind kind of moving from that tech space into that inflation sensitive space, and that's why we're seeing gold perform all year long. When there's a mixed or even a feelful thought of the market, you'll see gold and commodities kind of perform.
So the message always to the client then is stays the same. Stay well diversified.
Yep.
Between your correlated and uncorrelated positions, between your stocks and non-stock correlated positions. Have a healthy mix of owning a little bit of everything, because not everything's going to perform well always. And then if you have an income need, focus on the income first.
Yep. Focus on the income first. At some point, capital appreciation is not the total goal. The total goal should be preserving your assets as you're in that retirement distribution phase.
Because income
is the outcome.
Hey, thank you guys for being with us. Pay attention. We've got more content coming out. We've got a few pieces coming out here at the end of the year where we're going to be really focusing on our risk side of the investments and those non-correlated assets, like using max-funded permanent life insurance, using annuities and income annuities, and talking through those different aspects of why we use those in an income distribution plan and why we think those are great complements to your equities positions. We're going to be talking more about that, and you're going to see more content on that. And then also there's still a bunch of information out there that we're going to share with you on a recent lawsuit that Kyle Busch, race car driver extraordinaire, and his wife sued their advisor and Pacific Life on the inappropriate sale, or the alleged inappropriate sale of Index Universal Life, which we're not an overly huge fan of in our firm because of the complexity of that product. So we're going to talk about that more in the coming weeks. You'll see some of that in podcasts that we've already run, but we're going to continue to run updates on that because we want to keep you informed as a consumer and help you understand and navigate through the complexity of some of these financial products that are available in the marketplace, and where to use them, how to use them, when they're appropriate to use, when you probably shouldn't. So that's longer form content you'll get from us. But at any rate, if you're watching this and you enjoy it, please hit the like button. Please share it with friends. Please subscribe. It's what helps our content grow, is if you do that and then share it. If you have questions, we do monitor our comment section. So if you have questions and you want to reach out or give us a comment or give us a shout out, we would love that. If you don't like what we're saying, tell us that too. You know, we're big people. We can take the constructive criticism. But if you're just being nasty, we'll tell you to pound sand. Be prepared. Hey, love you guys. And happy holidays, Merry Christmas, and we're going to talk 4 more times before Christmas. So hope you had a great Thanksgiving. Isaiah, it was a cold Thanksgiving up in Michigan, huh? And we'll see you guys soon. Peace.